Hello, welcome folks. It's the midweek update. It's July 6th. I hope you guys had a happy and safe 4th of July weekend. I know I did. It was a lot of fun. Just got back from a little vacation and ready to get back into these markets. However, there's not much to get back into. It's only been a day and a half. But let's talk about what we have so far, folks. I've got my 2 cents. I know you guys have some trades we're definitely going to take a look at. I'm excited to go through those as well. Take this for what it is. Take responsibility for the outcome of anything you decide to follow along with. You guys know it. So, back from the 4th of July holiday, the markets rally off of lows yesterday, closing higher on the session, specifically the NASDAQ. To tell you the truth, folks, I guess the diamonds and the SPY didn't quite make it, but the Qs had a pretty good move. All of them had a monster move off of their bottoms. It looked like going into the holiday after Thursday and Friday, it had this nice pivot higher, the higher pivot low, I should say. And I expected a little bit of follow through, but it opened up pretty ominous, but it just came rallying right back. So we're hesitant so far today, and I imagine that these markets have really, well, I guess we did have the holiday weekend, but if you really get out into some of this sentiment and some of the economic data out there and you digest it, there's this area of, well, what do we do now? Now we do have earnings season right at the end here coming up. We did have a super horrible first half there. The last quarter was just awful. So we kind of have to take a look at what we could do moving forward. That being said, I do have some trades, couple from last week, couple that we've been looking at yesterday, so on and so forth, and maybe into Sunday's trading room. But there's really not a lot of conviction and direction here, so your guess is as good as mine. But here are some at least to throw on your watch list. If you guys are making trades, that's awesome. I myself, like I said, I just got back from vacation. I'm just waiting to see if these markets are going to do anything. So let's take a look at something, or I should say a few trades that we can actually at least put up on our watch list and maybe play with moving forward. This is BABA. Corey was talking about this yesterday. I thought it was a pretty cool trade. Bumped its head up against that 120 resistance. A beautiful ascending triangle pattern we got right here. A little hesitant today, but that's all right. Now, what I don't know is the move off of the NASDAQ that we've seen over the last little bit, and it has had the strongest bounce. I'm not sure if this is short cover rallies or bottom fishing. Probably a little bit of a combination of both, but I've got a little bit of a soapbox I'm going to get on here down the road, but just give you a little bit of an idea of where I'm going with this. I just see the expectations of an economy slowing down in some of the action I've seen in these markets, and I do believe that Rob and Darren did a really good job of covering that on Sunday. Doesn't mean that we're going to fall apart. Well, my 2 cents says we might. However, we are just seeing a little bit of expectations of slowdown. Not so much in the NASDAQ. It had a huge move to the upside yesterday after being on its lows, so I'm just not sure if that's a short cover rally or they know something I don't, right? One of those things. But the cool thing is, as we get into earnings season, we are going to be able to see that much clearer. However, I do like BABA. Beautiful ascending triangle pattern. You got to be patient with this. Put this on your watch list. If the markets roll over, go sideways, or roll over, I should say, then you could just kind of scoot this aside. However, if we do establish the support that I'm going to show you here in a minute on the SPY, then this could be, or the Qs, I should say, this should be a really cool little breakout above the 120. Be slow to enter this. There's no reason to try to front run a bull trade until you get a bull market. I'd rather have you guys late to a bullish move than try to guess that it's going to happen. That also goes for you bears out there to the downside. So just be late. We don't have to catch the bottom or catch the tops here, guys. Just kind of follow along with what the markets are giving us. Okay, so moving on to the next. I like Moderna. Moderna's been hanging in there pretty well, and it is in the strongest sector so far this week. I know it's only been a day and a half, but I think that the sector strength is actually from Wednesday to when I pull it next Wednesday. But we did have a breakout yesterday above a 150 level. There is a couple of different types of patterns we can take a look at with this. This would be a miniature head and shoulders pattern, right? Or I should say a shoulder and this. They have scoliosis. We'll say that, right? We got a shoulder, we got a head, and then we got a little slump over there. But that's cool because it's showing some strength. We also have the argument to be made of a very aggressive ascending triangle pattern regardless of the fact, I do like it above the 150 mark. So if it could stay here sideways to up, I think it's pretty cool. Aggressive target up here at 170. See if it can't just go sideways or even retest the 150. It's definitely bullish to sideways at the very least in the shorter term. It's in the strongest sector. Right now, healthcare was the strongest sector, energy being the weakest. So it does have that advantage. I do like it. I think it's a pretty cool trade. And if you guys want something to kind of hedge off some of the bears you have, that might be a good place to look. Amgn, this is cool. So Amgn and UNH, both these trades were sideways last week, and they're still sideways this week. Lots of things you can take from this. If you want to be patient and slow play it, we could see if this is indeed going to be some sort of a symmetrical triangle pattern where it's going to gather strength and break up or down. I think that the VIX is also in a pattern very similar to this. Don't know if it's going to break up or down, or we could just continue to play it in the range that we had it to begin with. It's a wide range. This is a big moving stock. It's volatile. But you guys, if you placed this thing a couple of weeks ago or even last week, you're doing really good if you're playing this butterfly or I should say condor spread if you want to go that wide. So it's still looking really good on the sideways side. It's outperforming. It's showing a lot of strength, and it's in the strongest sector, healthcare. Okay, let's see UNH. Shocker, same sector, same strength, same outperformance. You could make the argument that it is trying to break out. Now, I believe last time we talked about this, I might have made mention. If not, I'll say it now, is this widening range, right? So when you have an expansive range, it's getting a little bit more volatile, but this is above its averages. It's showing a little bit more strength. If you're going to err to one side, I believe it should be to the bull. And what's really cool about this, folks, and what I like to do with my watch lists, I don't like watch lists. I don't like to keep trades around much longer than a week. But if I see that the markets consolidate and they break out, and let's say we fast forward here to Friday, we have a good day today, tomorrow's super strong, and we do confirm that higher pivot low on the markets, and we break out above resistance, I'm going to just race over to these stocks, UNH, Amgen, some of these sideways to up stocks, and look to actually buy them to the bull side. So keep that in mind. It's actually kind of nice to have a go-to, especially if you get caught short. Right? There's a lot of shorts out there which are doing great, and I don't want to abandon anything. So I'd rather add bulls to offset some of my short exposure than sell shorts. That's just me. All right, jumping down to the bears. Nvidia, I like this. This has been on watch list for quite a bit. It has this beautiful descending triangle pattern right through here. All right, let me get my target button there. And what I do like about this is it did confirm last week. We might have talked about it last week. I would be surprised if we didn't on one of our classes. Maybe even I did. It's looking like it wants to bounce. It's fizzling out today. Once again, folks, coming out of that holiday, that was a really good move by the bulls, thinking that, oh boy, here comes the rollover. The pivot point that was set last week has failed, but it came rallying back, and right now I don't think anybody knows what to do with it quite yet. So we'll see. Not just with this, but the markets in general. So if this can continue to stay below that 160 level, this is a pretty tight one, 155-ish, then sideways to down, it could be a pretty good candidate to roll over and go further down. Paychecks also from last week. Now this one isn't really ready to trade, but I like the fact that it really just didn't participate in yesterday's move. In fact, it has this huge ugly shadow, if we get a little deeper into it, right there, where it did climb all the way back, but it didn't do much past that. You'd expect this to be a little bit higher, showing or I should say at least the want to go higher, and it doesn't seem like it wants to. It seems like it wants to pin itself at the 115 mark. Now, Paychecks is just one stock, but I'm going to use it as an example of what I believe is going on in the NASDAQ. I truly believe that was an absolute either bottom fish move or short cover rally and something that's been beaten to death. But as far as that was the bottom in the NASDAQ, I cannot even get close to believing that because, hey, if we are indeed into an economic slowdown, demand's going to slow down, jobs are going to drop. I don't want to be super bearish, but we get into the corrective mode, the super bear market. We actually try to find that bottom. It's this stuff that doesn't do very well. It's one of those things where it's like, I do not need the high-end tech. I can't afford it. I don't know why I would use it. I got to worry, and Darren put it so eloquently last on Sunday, I need to worry about gas and groceries. I got to save money for either one of those. I don't care about a software that does this or a software that does that or the expected growth of ABC. It's kind of funny when you go back to the nuts and bolts, this stuff should fall wayward. And it will be reflected 100% in its earnings. So it might be a interesting earnings season. All right, folks, that's all I got when it comes to the picks. Now let's get into some market analysis because nothing's really changed over the last week from week to week. I know that we had a holiday on Monday, which was very difficult to. It's really difficult to have an outlook in a day and a half so far. As I look at my watch, right, it's still going on, but nothing's changed in the overall motion of the ocean. Let's take a look at the market performance so far. Now understand, folks, I pulled these about 20 minutes ago, so this is a day and a half of data. The diamonds and the S&P have still yet to get past a loss. The Qs, on the other hand, up 1.4%, and that's with the move it's had to the downside today. I don't know if we're going to fall apart today and all these just go red, or if we consolidate a little bit this afternoon and then continue higher like we did towards the end of yesterday, because that push to the upside was pretty impressive. Now, I'll tell you this, and Corey made mention of this yesterday. Oil, gold, precious metals, commodities getting punished. Now, it's beautiful to see oil below $100 a barrel. Go ahead and check it, folks. As I'm talking, last I saw it, I thought it was like 97, 96, somewhere around there. It could have popped up. However, it does show, oh, okay, great, here comes the ease at the pump. Not so fast. We're not going to feel that until many months down the road. Until we get something that's immediate, gas is not going to come down anytime soon until demand does. Now, just because a futures contract drops something lower does not mean that it's going to dictate directly to the consumer. Keep that in mind. However, this is the bad side of this. If people are bailing out of what was the leaders over the last few months, defensive stocks, energy, materials, and I'll show you the chart here, there are leaving in droves. They are falling apart. They are the largest losers, 11% down here on the oil. The biggest loser, I believe, was either energy or materials, 10%. Huge drops. That is an expectations of lower demand in the future, meaning the economic slowdown is absolutely pricing itself in currently. So, don't want to be this ominous guy, but we're starting to see things like that. Let's get specific to the charts. Now, this is a difficult chart to read because we only have a day and a half into it. However, let's talk about it, right? I like this, and I want to be glass half full here. Once again, we have a little bit of a skewed head and shoulders. We're trying to hold on to what I thought was really, really cool at this level here. Now, my expectations were we're going to rally and turn. I think we were talking about it at this point. I'll be honest here. And if that rolled over and fell apart, I'd say, okay, that's it. Throw in the towel. We're done. I want to see the VIX would definitely break above its highs, get into the high 30s, even low 40s, so on and so forth. It didn't happen. We got a pretty good move to the upside, retested this, right, previous support, but we are rolling over again. Now, this is going to be a huge push-pull line. This is big, and this is what, Thursday, Friday, Tuesday, Wednesday, and yesterday's move really saved it. Yesterday's move really saved this consolidation above this point. So, good news is the markets aren't thrown in the towel just yet. Bad news is very difficult to chart in the short term. So, you got to take it for what it is. Longer term, and I actually had a couple of emails about this. Hey, Joe, since the longer term outlook is -3, can we play that? The answer is absolutely. If you guys seriously want to put on a bear trade, and don't be super aggressive. You don't have to target the SPY here down to 300. but you could put on a longer term bearish trade through earnings into August, maybe even September at 360, 375, or excuse me, 365, something like that. Absolutely, that's great. Play the longer term. A lot of traders ask that. I'm having a hard time week to week, Joe, but if we're -3, can I play that? Yes, you absolutely can. Just don't put your your whole portfolio negative for the next 3 months as a -3. But what we saw yesterday is a little bit hesitant today, and it's crazy because it's one of those things where all the traders come back after a holiday and they already know what they're going to do, and they hit the button. They all hit it at once, and what ended up happening was we came directly off those lows and closed a little higher or right at levels from the previous week. Today happens. What do we do? I don't know. What are you going to do? I don't know. So we'll see what happens. It's going to be kind of fun to watch. Now, it's a little bit different on the Qs, but let's get to the diamonds first because the diamonds should be the weakest because of the exit, and I'm just going to say it. The exit out of the sectors that have been leading the strength for the last few months, I mean, it's a fire sale out there. They're getting punished, and I'm not sure if that's a precursor for what we could expect in the economy moving forward, or if it's just traders that are skittish and scary and froggy. Hey, let's just take some profits. Let's not worry about what the Fed does. Let's not worry about how the consumer reacts. Let's just get out because they've had massive gains, beautiful runs in energy and materials over the last handful of months. But it doesn't look too bad so far on the diamonds here, does it? It is below the resistance level where the others actually have exceeded that, and it looks like it's about to roll over. So if you're going to be bearish, pretty easy. Okay, so here's the Qs. The strongest of the three, this one ended up being positive quite a bit. It's still positive over just shy of 1.5% so far. We'll see what happens today. But I do like the bounce. Let me go ahead and draw this right through here. It's still sloping lower. You guys, you still need to understand that this is still overall sloping lower, even though we could establish our first pivot high. I would not be to the bull side until I see something up to this area, right? So just be patient. You're probably going to be stuck in a little bit of a range here until we get something a little bit more substantial, either more fear or greed, or we get some good news or bad news when it comes to earnings. Past that, oof, your guess is as good as mine. All right, so let's get into the economic data. Factory orders, 1.6% versus 0.6. Core capital equipment orders, higher as well. Services PMI and ISM services also slight upticks. Now, I went through these numbers and thought to myself, why would this happen? I'm going to gravitate to they've been so weak, we have a little bit of a consolidation or even a little bit of a bounce. Yes, folks, the rubber band stretching and pulling and snapping back also works in economic data results when they're also pulled, depending on when they're pulled and how they're pulled. So it is cyclical. They don't just go straight down or straight up. They can actually have bounces. So I'm going to keep that. Now, why I'm keeping that outlook is because job openings dropped for the first time in a couple of years. Now, it was above expectations of 11.1, but this came down from 11.7 previously. So we are seeing contraction in businesses. Defensive. If you're a business, you're worried about a slowdown, you're buying into what we're seeing in the overall economy, you're going to immediately preemptively slow down. That's not good if that escalates. So keep that in mind. We do have a contraction in the economic numbers. The consumer is also slowing down. Now, job quits, 4.3 versus 4.3 previous. It was, I don't even know how to price that in. I don't really care because it's really not. I mean, quitting a job is one thing. If it pulls from employment and we see unemployment, claims go higher, we got an issue. If people quit their jobs to try to claim unemployment, then we have a bigger issue. This could be retirees. This could be people leaving for something a little bit better that's not recorded by the job services. So I'm going to let that sit to the side for now because I want to focus on something that I can measure. Now we have the Fomc minutes. I imagine Powell and the gang are going to do everything they can to spin this a little bit more positive. They do have to stay on track when it comes to increasing interest rates. However, when you see contraction in the economy, it's super difficult for the Fed to continue to increase interest rates. They have to because they're playing something else. They're playing an inflation game. Now, decrease in demand should help with inflation, but they can't gauge that. They can't go off of that. And Darren, I think, explained it really well on Sunday that this is something that they were late to get to. Now they're late to chase, so on and so forth. We'll see how far that goes moving forward. That's its own game. Jobless claims on Thursday, continuing claims as well. Non-farm payroll will be an interesting one. Unemployment rate, I don't think that's going to change too much. If we start to see layoffs by businesses, then we're in a whole different area of worry, and that's going to stink. But it would be great to see that at the same time we see inflation start to come down. Rob made mention of this as well on Sunday, saying that this is a ball that has to go up and then come back down. Now, he didn't use that. I'm actually using that. But it usually comes a little bit later. So when we see the peak of inflation, we won't feel it as an economy for months later. So keep that in mind. And at that point, it just depends on the consumer's sentiment and investor sentiment to see if these markets find new lows. I don't want to put words in anyone's mouth, but I agree with Rob if he believes that this is by no means the bottom. I have to agree. All right, so that's it economically. Let's take a look at our poll. I'm going to go ahead and launch this poll for you. Now, I changed the name of this poll to, what did I change it to here? This week's Outlook. And why I wanted to do that is because I want you guys to tell me, come Sunday, what you were thinking and how you felt, right? What you're thinking on how you felt. Now, if that has changed, by all means, go ahead and click the change that you have. So this way, it's kind of cool because I'm asking you on Wednesday what you thought Sunday into today, right? So let's say that you were a 0 on Sunday, and today you are a -1. Then you could put down, hey, I'm a -1, or you could put down, you could click 0 and -1, right? Because you can multiply select these. So I'm going to leave it to this week's Outlook, and what I might even change that to your week Outlook, right? Because I'm trying to get how you've evolved from Sunday all the way to today and into Friday. So I'm going to do it shorter term, week to week. I think that would be a little bit more fair. A lot of discussion. I had a whole vacation to think about it. And instead of saying, hey, from Wednesday to Wednesday, from Wednesday to next Wednesday, or moving forward, I'm just going to say, look, where were you and where are you now? Combine the two. Let's move forward. And I think that's fair because it's kind of cool because you don't have to just choose one. You can click as many times as you want. All right. Or at least, I don't know. I don't know how many times it actually lets you. We'll see. Cool. 94% voted. I like it. Love it. This is great. Okay, guys. So let's go ahead and end it for you people who are watching this recording and just seeing the economic reports. I'm going to close the poll. I'm going to share it. All right. I'm going to move this big old screen over there. So what do we got? Okay. 88% 0, 41% -1, 24% +1, which there is an argument in both those directions. It looks like we are definitely leaning a little bit more towards the bear side, which is easy to do right now, right? Because we get that red candle yesterday. I think a lot more people would be 0 to +1. We'll see. It's tough. All right, guys, thank you so much for that. That really helps. So we're about a -1. Now for me, I'm a -1 as well. I just didn't mark it. And the reason being is because I could see this candle park itself. I would be very interested to see. First of all, let me just show you guys. I'm definitely -3 monthly wise, but it'd be very interesting to see if we could actually move higher. And why I'm saying that is because I truly believe it's going to take something outside of just the motion of the ocean. There's nothing out there that really would bring an investor to say, you know what, I'm confident. I'm confident taking my money. I've seen the markets fall apart. I'm going to put my money back to work, especially going into earnings season. I truly believe that might be pretty difficult. Let me close the poll so you guys can see what I'm talking about. If I can find the poll. Sorry guys, I moved it somewhere. Oh, there it is. There. All right. So hopefully you guys can see what I'm looking at. There it is. So yeah, I mean, nothing really new from where we were Sunday. Nothing really off of what Corey was talking about yesterday. But to park it here might be probably the most, I don't know, probably the most expected. And to roll over, just based on, well, let's get to it. Just based on the sector performance, I just the abandonment of utilities, energy, and materials. I just don't know how we can muster anything positive. So here's our weekly performance. Let's jump right into it. It is early. This is tough, folks, because this is literally a day and a half. But look at the consumer. That's flat. That's zero. Now that's just consumer. Consumer defensive was actually up almost 1%. But I just wanted to go with the retail sector. Nobody seems to care. Technology still with that good move in the Nasdaq, down 0.75% there. Healthcare strongest, up almost 1.5. Financials dropping, but look at materials and energy. Jeez Louise, folks, just smashed. And yes, it is. Copper's down, gold's down, oil's down, gas is down. Everything is just down. It's just getting abandoned. And I'm wondering if it's profit taking and or the worry of a slowing economy and the demand for that moving forward. So let's take a look at those charts. First, we'll start with the healthcare, and healthcare actually shows a pretty promising, nice little flying V. Should we call it that? I don't know. But anyways, there's your little V. But a head and shoulders pattern. It's above the moving averages. It's not really screaming at me, go ahead and buy this. I would be a little bit more comfortable waiting. And what's cool about this, the reason why I'm drawing these lines a little bit further out and I'm asking my bulls to do more for me is because the markets are in a downtrend. I'm a -3 longer term. You really need to prove to me that you're going to move higher before I put my money on the bull side, even in the short term. Last thing I want to do is, hey, this thing's going to go from 30 to 32 in the next week and a half and have it just fall apart. No. Let's establish some strength. Let's see if the market's going to at least show some consolidation or some sort of a range before I really get aggressive in my bullish exposure. Now that's my 2 cents. Well, you guys can follow it or just say I'm crazy. It's up to you. Take a look at energy. This beautiful gain we've seen since the beginning of the year. Hey, flight to safety, defensive stocks, buy them. They're great. Everyone's moving to defense. They're worried about inflation. Darren even once again said it on Sunday. We've been touting inflation for a long time. So if the worries are there, let's fly to these safety stocks. Well, guess what? Those are gone. Couple of reasons. Slowing economy means slowing demand on energy and materials. Also, the commodities and the futures traders are also going to start buying them and taking profits. There's healthy profits in these. I'm just going to leave it that simple. I don't want to get too deep. All right, so conclusion, investors exiting materials and energy, profit taking with expectations of slower growth. That's my 2 cents. Whether I'm right or wrong, I don't care. But what's a fact is these things are being abandoned like they're on fire. They got the plague. So we'll say sentiment definitely bearish. I was going to add pessimistic, but I believe that's already built in. Bearishness, you could put worries, fear. I don't see a lot of new investors jumping into this bounce off the bottom in tech. Instead, I truly am going to mark it up to short cover rallies, because if you were short the markets in March, you've been doing really, really well. You might as well get out of them, especially over the last quarter that just printed itself saying it was the worst in a long, long, long time. That's a good time to jump out of the bears and maybe look into something else. Economic data slowing growth across the board. This is both on the consumer side and the employer side. Now, we do have unemployment. I don't think that's going to really have an impact on what we're seeing, what I just said, until maybe next time, maybe a couple of weeks from now. We are moving into earnings season. I have no idea how these companies are going to spin anything good out of their numbers outside of maybe open stock sales or splits and stuff they generated by acquiring or selling stuff like that. So it's going to be a little bit more of a circus when it comes to, hey, we did well. Well, why is that? Well, because we sold some of our oil futures, we closed 2 stores, and we reinitiated another round of stock. Okay, well, yeah, that's how you beat numbers, but it doesn't mean it's growth. So keep that in mind. It'll be a fun one to watch. All right, that's enough. Let's get out to the markets. Let's see what you guys are looking at. Let me see if I've got a big enough list. Oh, not bad. Not bad today. Not bad today. So let's jump out. And as I've been touting, it's just been chopping around. Not much. I really think that we kind of finished the day flat. That was a pretty massive push to the upside yesterday to get back to kind of even. There's not a lot of data out there. We'll see what the Fed's talking about right now and some of the Fed speak, because we do have some Fed minutes today, and see if that's going to change things optimistic or pessimistic. I imagine they're going to spin it as much as possible to the optimistic side. Of course, they should, but we'll see how the markets digest that. Okay, let's get up to the top. We're going to start with Brian. Brian has SO. Southern Company. And utilities. He's looking for a bear put spread, and I understand why. Big bounce to the upside off of decreasing volume the whole time. Take a look at this. This is 101, guys. Increasing volume as it falls, decreasing volume as it bounces. Yep, beautiful bear rally. A little stronger than you'd expect, but a beautiful candle yesterday. Pivoting, waiting. Sure, I can get behind that. Let's go ahead and draw some lines on this. Maybe a 70 target. He's talking about a 72.66 bear put spread in July 15th. 2.5 weeks, right? Because we're right at the first. I'm going to guess it's that. Yep, 66 is a beautiful target here. Right at that area. And starting at 72 in the money. I like it. Just trade. Nice trade, Ryan. Cool. All right. Moving out with a little bit of your longer term, right? -3 outlook. All right, Justin, we have Dawn. Zoom in a little bit on this. Possible 17.5, 22.5 call diagonal spread, looking for July 15th, August 19th. 17.5 calls. All right, let's see where they're at. Right about 17.5, right here. There it is, somewhere around there, and you're shooting for 22.5. Okay, right about there. Yeah, I can see that. Maybe playing this channel. I'm okay with that. It's great. That's fine. I like it. DAWN. Once again, if you're going from July to August, sounds like there's only monthlies available, and that's a good way to do it. Set your target out a little higher for the longer term. If you guys wanted to, you could see if you could tighten that up. Maybe reduce your cost, but it also reduces your gains. So I like it. Healthcare, it's in the right sector. Looks good. Thanks, Justin. All right. Let's move out to our next trade. Joe's got Chewy. Oh, Chewy. This is one that, oops, not Chewy, GWY. There's the ticker. A cup and handle. All right, let's see. Get my pen out. Oh, yeah, look at that. We love cup. Oh, that's a great one. Cup and handle. You guys could also have this as an ascending triangle pattern. Same idea. Instead of doing that, let's zoom in a little bit, get more specific. Right. Looking at needs to break out above the $40 for confirmation. Sure. Yep, right through there. Cool. You got a first tier target at 45, an extended target about that gap I'll throw out. Let's call it 50 just for a fun round number. Love it. Good. Internet retailer. Is Chewy.com, is that the dog one? Or excuse me, online pet stuff? I'll tell you what, there's some recessionary proof things out there, and I talked about that, I believe, last week. Now that COVID's over, knock on wood, or It's going to be booze, cigarettes, cosmetics, entertainment, like TV, movies, TV, stuff like that, and pet stuff. Pet stuff does not get hurt in times of slowdowns. Cool. Thanks, Joe. EQT. Well, what I've seen. I shouldn't say that's a fact, folks. Apologize, but what I've seen in some of these, they usually hang in there pretty well. All right, cool. We got another one here. Diagonal put spread, July, August as well. 28.33. Okay. Some lines here. 5, 6, 7, 8. Can I call this there? Okay, that's about right. 33, basically right where it's at. Sure, absolutely. Beautiful little breakdown here. Couldn't really even retest that. Falls apart. Good volume, good momentum, good volume. Great. Thanks, Justin. Looks awesome. All right, moving along. Who's next? Disney. Got a little bit of a lower base pattern. Test the 20-day. Goods earnings are scheduled for August 9th. Looking to place a downward broken butterfly. Cool, Michael. Let's take a look at it. Broken butterfly here. 75, 85, 95. Let me zoom in first. Makes it a little easier. And since he's targeting it, let's get more specific. There we go. 75, 85, 95. 95's right there. 85's right there. 75's, I assume, right there. Broken wing butterfly to the downside, playing it through earnings, sounds like. Mike, I do love the pattern to begin with. I like the fact that it's just not making that 100. That's neat. It'd be a nice little consolidation. He's thinking this thing is, it's going to bleed its way down to 85, and or it's going to have bad news and pop down past this. And it's fine because I love the broken wing butterfly for an earnings play. It lets you say, I don't think it's going to get to X, a specific number, right? Like in this case, I truly think that Michael thinks this is going to be at 85 after its earnings. Or whenever, he wants to play that game. However, if it falls before that or gets its butt kicked and it starts to fall apart, this is ideal. This is 85, right? But if it keeps falling apart, he doesn't give up all his gains. Cool. Thanks. Put down Disney on the Bear Watch. Now it's funny, guys. The August 8th is a while out. So if you want to play something in the meantime, feel free. I'm going to put it on the Bear Watch. Excellent. Thank you, Michael. Eli Lilly, huh? I've been taking a look at this chart for a while. Oh, wow. Look at this. Outperformer. It's nice to see consistency in the sector, isn't it? We've got that here in healthcare. Long target 340. Okay. Tried getting filled yesterday. No luck. Still looks good, though. Yeah, it does. It sure does. It looks like it was triggering yesterday. You do have a second opportunity to do so. Now, if you want to get in a little preemptively, if you want to sell that 340, if you do a 330, 340 diagonal spread, something like that, you might be able to work your way into it. However, James, yes, sorry, James, I would wait for that to kind of confirm. So you might be feeling like you're chasing it, try to price yourself in, but that's okay because you kind of want to get into it as the momentum's moving. But it might be a little easier to, instead of like a straight call, do something diagonalized. I know that you're probably doing something like that. That's fine. Let me write it down on the bowl. It's a good one. It's very nice. And then you did have a bear. Let's look at that. MTCH. Match. Watching for confirmation target 60, 62. Oh, before earnings too. Thanks. Mike's playing. Okay, sorry folks. Just to let you know about Disney. Mike's going to play that before earnings. He's got it broken just in case it falls preemptively, but he's going to get out of that when that bad boy hits 85. Thanks, Michael. Okay, moving on to Mitch. Watching for confirmation targets 60, 62. 2019 support. Oh, so you're way back. Okay, let's see. Let me zoom in. Zoom in on that. It's much easier if we just play the zoom card, right? Draw some lines. Resistance. 60 to now 62. Okay, so he's shooting down here, right around this area. If it breaks this floor, great, excellent. He said he's got support level back there a few years back. You could also project it that way, or you could snap Fibos, right? Snap some Fibos. Go from here to here to here, or the extension, I guess, would be from here to here to basically here, and extend Fibos. But I like it. MTCH. Cool. And then to finish up, he also says take Yeti. It might be a good one. Is this the coolers that cost like $700? No, I don't know. They say cyclical leisure. I imagine those are those really cool. And once again, I used to get the styrofoam coolers from 7-Eleven. I don't know about paying for a $300 cooler that's bear proof, which is they're really cool. Don't get me wrong, but I've never seen a bear outside of a zoo or far away at a park. So I don't know. Let's see. His idea is similar chart. It is. So this is showing a little bit more strength, and I'm not sure if these are just oversold bounces, right? This pivot's a little worrisome because it could show a little bit of a consolidation there. But if I was going to flip a coin on the Yeti, I believe it'd be sideways to down. Let me put it on the bear watch just for fun. Although this should be their peak season, right? Nothing says summer than a $700 cooler. All right, let's move on to potential for sideways bleed. JPM, huh? Yes, this is not okay. Or even something a little bit further. Wow, that's not looking good, is it? Let me get this up. Yeah. A little tough. Yeah. Yeah, it could try to maybe do that. I think that's what you're going for there, down. Potential for sideways bleed down. Yes, JP. 110, 107, 104. I like it. Yeah, absolutely. Sure. Just bleeding down here based on either projection or Fibo, for sure. Let me put JPY down as a bear. I'm going to just put it as a bear. It's in a good sector to get smashed. It's not doing too well. So, fun trade. Thanks, Dan. OXY, yeah. On our watch list, wasn't it? Did I put OXY up there? I hope I did. I liked it. So, let me zoom in a little bit. Play with it. Yeah. He's got a 60-55 for sure. If you want to play that range, look at the way that this just came back. And I imagine if we zoomed in, they'd probably be later in the day. It's starting to bleed, but push up. Starting to bleed, push up. It's just, I don't know if it's going to hold on. It's trying to hold on, but the way that oil's going, ouch. Diagonal put spread, sideways to down trade. We'll consider selling one and rolling out for another week for sure. Now what he's talking about is if it's going to play this game over and over and over, let's say it just does this, well then he'll sell another 55. But he's just waiting for the crash down. I like the descending triangle pattern it's got going on. The way that commodities are just being beaten down right now. It's everything. All signs point to yes, especially to the bear side. Thanks, Sebastian. Be a fun trade. Okay, and that's it. Good. I was hoping that would be it. No, I'm just kidding. Look at that, climbing back up. Yeah, today's going to be that game where got back from the 4th of July holiday, thought that the markets were going to fall apart. They come rallying all the way back to close flat, and the NASDAQ puts in, what, almost 1.5%? Well, that gives you a time to actually think of really what you want to do. Because now, if the markets closed on their lows yesterday, I truly believe we'd get a follow through, a lot more selling, and everybody be okay. That was it. We're out of the holiday. We're dumping. It was a horrible quarter. I don't want to have any of this money in these stocks, especially into earnings season, so on and so forth. But when they come rallying back, it makes you second guess or kind of say, and pause. And I do believe that's kind of where we're at right now in these markets. So, that being said, we type in some good trades because we have both up and down. Okay, just typing these in. I know you guys can't see them yet, but we'll get there. I do believe that energy materials still continue to get smashed, especially if there is a worry about an overall economic slowdown. We might not even see it until fall or even winter this year, or I should say winter next year, whenever it rolls over to 2023. But it could get a little bit uglier, and that's going to be more on the consumer side than it is, I think, the markets. The markets are trying to price this in. They're definitely trying to price this in. What's interesting about it, they don't know how. I truly believe we haven't seen a bottom, truly. However, I don't know if we found some sort of way that these markets can kind of stabilize and take a breath. We see a pretty good. Oh, sorry, folks. Let me have you take a look at this while I'm blabbling. We've seen a pretty good. Well, I shouldn't say recovery, but we've seen the, what do they call it? Cryptocurrencies. Cryptocurrencies kind of level off. They could be taking a breather, small bounce in Bitcoin. Bitcoin was pushing low 19s. I thought that was pretty interesting, but it's back above 20. So we'll see if it's just a little bit of a breath before another deep exhale. That's kind of how this feels so far. Way too early to tell. We're only a day and a half into this week, and it's going to be a shortened week anyways. I have to echo what Rob, Darren, and even Corey said yesterday. We're just kind of in this hangout period. It's very difficult to trade right now, but earnings could increase that to either up or down. I imagine it's going to be to the downside. I don't see how they can get out without getting creative accounting, right? So we'll see where that goes. All right, guys, that's all I got. It's not much because I don't have much to go on, but we'll talk to you guys next time. If you got any questions, you know how to get a hold of us, and thanks for joining me. Bye, everybody.